All right, guys, welcome to the FlexCandle live technical analysis episode number 2, where we read the candles and flex the moves. Now, in today's episode, we're going to be going over Netflix, SoFi, Robinhood, Bitcoin, and Ethereum. And if you guys have any stocks or crypto you want me to go over, feel free to put it in the chat, in the comment area. And if we have enough time, I'll take a look at them. Now, let's start off here with Netflix. And we're going to start off here with the monthly chart. Right now, Netflix is at $70.90. Now, last week, I made a regular episode on it, and I said that it looks like we might be going to $65. So let's analyze what's been happening with Netflix since last week. Right now, this monthly candle is really bearish. This closes in the next 4 days and 21 hours. So if we cannot get back above this 21 moving average, this looks to me like it could be a head and shoulder pattern. Left shoulder, head, and this is a right shoulder. Now the measured move to this, let's take a look at it, could take us all the way, I think, to the 200 moving average here. Yeah, pretty much to the 200 moving average, possibly even lower. That's at $30.52. Now, it sounds kind of crazy. Is Netflix really going to $30.52? That's what the technical analysis is showing. We can see here that the RSI has dropped off below the 50. We can see here that the Stochastic RSI are still rolling over as well. Now, we do have some lines of defense here. We have this 50 moving average that is holding us right now at support at $67.01. We also have this 80 moving average at $59.63, and we also have this 100 moving average at $54.30. This is a monthly chart, so this takes a while to play out. This could drag, we could go down, go back up. This 200 moving average will eventually go up a little bit, so maybe we don't fall all the way down there. We could fall down maybe to $45, $40. Now, if we get to this 100 moving average and we look like we're going to start making a bear flag or something, that's where I will be saying, yeah, we're probably going to be going to this 200 moving average. So this is just something to look out for if Netflix continues to be bearish. Now let's head over to the weekly chart. Now with the weekly chart, we can see that the RSI still hasn't really reset. There's no curvature to start pointing back up. The Stochastic RSI are still kind of low here. There's nothing showing that we're going to pump back up either. And look how long we dragged here prior. So something like this could definitely happen and cause us to continue to go further down. Now we're right above the 200 moving average at $69.98. If we lose this 200 moving average, we could possibly fall down to this point of control here at $55 pretty easily. Now you guys can see the head and shoulder pattern here more prevalent. This is a left shoulder, a head, right shoulder. This whole thing could be the left shoulder. Now, something that I could tell you guys is that we're below the 50 moving average on the weekly time frame. And whenever we're below the 50 moving average, to me, that's the beginning of a bear market for that asset. And ever since then, we haven't really looked back. We haven't been able to get back above it. I'm not liking this wick right off of the 50 moving average either, off of this red candle. This gave us tweezer tops. And ever since then, we've been falling down. Every time we see tweezer tops, that usually indicates that we might have more downside. Look at over here. Green candle, then a red candle, more downside. Green candle, red candle, more downside. So right now, we have to see we could hold above this 200 moving average. Now, one thing is that we are far away from the 21 moving average. And usually when we're far away from the 21, we're not going to continue going down. We're probably going to go sideways if we're bearish, and wait for this 21 moving average to touch price, and then we'll roll over. So maybe a bear flag would form here. Or if we start to get bullish, this is starting to drag here. Maybe we start pointing up. We could make it at least to the 21 moving average, which is currently at $88.43. And if we're bullish, we have to break above it. If we're not, and we remain bearish, then we'll probably roll over from there. And that will probably indicate that maybe this is going to trigger this head and shoulder pattern. Now let's take a look at the daily chart. Daily chart looks very bad as well. We got rejected off of this 200 moving average. We're below all of the moving averages as well. And again, we're far away from the 21 moving average. As you can see, we're starting to go sideways. Stochastics are low, but I'm not seeing an indication yet that we want to start coming up. Now, maybe this could double bottom here on the Stochastic RSI, and then that could give us the pump up to the 21 moving average. We will have to see when the Stochastic RSI gets back up here toppy, were we able to break above the 21 moving average, so that if we roll over, maybe we could use that now as support. But if we make it to the top of the Stochastic RSI and we're still below the 21 moving average, that to me means we're going to end up dumping. Now on the 4-hour time frame, Stochastics are low, but look, we can see that we're starting to roll over here still. So this looks to me again like we're probably going to go lower. And this is looking to me like we're already forming some type of a bear flag. So let's put here the patterns for the bear flag, and let's see what measure move this could give us at the moment. It probably looks like it's already starting to break down a little bit. We're a little bit below the bear flag. So the measure move to this could take us all the way down to about $65, which is pretty much what I said in last week's episode. I'm expecting a move to $65. So let's leave this bear flag here. Let's see if it starts to play out. Now, last week in the episode, we do have a winning trade for Netflix. You guys can see here, I did give on the 15-minute time frame a bear flag with a measured move taking us to about $75. I gave this entry at around $79. Not only did we hit that, but I believe we went as low as $70.86. So that's a winning trade there. Congratulations on whoever took that trade. This is a big win for the FlexCandle community. Let's take this off so things don't get too cluttered here. Now, guys, if you guys are interested in technical analysis, check out the links in the description. I have a FlexCandle trading course that will teach you how to do technical analysis, and you guys can also learn how to read the candles and flex the moves for yourself. Now, guys, let's head over to SoFi. And let's start off here with the monthly chart. Now, this is an interesting chart here, because if we close below this 21 moving average, I would have to say that we're bearish. We technically already have a few candles under the 21 moving average. We're trying to see if we could get back above it. Now, the stochastics are resetting here. And if we zoom in, we could kind of see that we're starting to point up. So if this could start moving up here, then we could start getting more bullish for SoFi. SoFi has been holding good support at around $17. Now, this could be a bear flag if we cannot get back above this 21 moving average. You see the pole, and you see that we're going here sideways. Now, we could get back above this 21 moving average. I would feel bullish here with SoFi. We could see that we're trying to hold support here in the RSI on the 50. Now, if I put on the patterns, I'm seeing bullishly a possible falling wedge here. Now, as you can see, we're already starting to break out of the falling wedge. We're going sideways here for this month. If this falling wedge does break out continues its measured move, we could get back up above $35, $34 around there. Now, in order for that to happen, I would need us to get back above this 21 moving average, this white line on SoFi. The stochastics look nice enough that if we continue going up, this could be the possible move. Now, again, this is a monthly chart. This could take a while to happen. Let's take a look at the weekly chart. The weekly chart here is not looking too good. Why? We lost pretty much all the moving averages. We're below the 100 moving average at the moment. And again, we lost this 50 moving average. If we lose the 50 moving average on the weekly, to me, that indicates a possible bear market for this asset. The stochastics here are also toppy. We're below the 50 on the RSI. This is all bearish to me. Now, something that could work in our favor is that maybe this is a possible double bottom. One bottom and two bottoms. And if that's the case, then the measured move to this could bring us back up and possibly get us back above this 50 moving average to about $24, $25. So in order for this falling wedge to play out on the monthly, the first thing we have to do is get back above this 50 moving average. If we continue going sideways, we can't get above this, then we're probably going to break down, and maybe this is just a bigger bear flag that's going to bring us further down. Let me take this off so it doesn't look too cluttered, and try that again. Now, one thing is that we are getting close to this 200 moving average. So if we cannot get back above this 21 moving average, we can easily fall to this 200 moving average, and that's at $12.27. Let's see what ends up happening here with the Stochastic RSI. This dragged here for a couple of weeks. So if we get something like this happening, this could be what we need to get back above this 50 moving average. Now, heading over to the daily time frame, we're below the 200 moving average. That's bearish. We're holding on to these clusters of moving averages. But look, we have resistance bringing us down below this 100 moving average, this blue line. If we could ever get back above this, then I could see us making a move to the 200 moving average, at least to test it again. And that's at $22.53. Now, the stochastics RSI are kind of indecisive here. We could just roll over and lose this 21 moving average, or we could go up. So let's see what ends up happening. Right now, we're in between. I would still be bearish here unless we could get above this 100 moving average at $17.21 with strength. Not the 21 moving average, but the 100 moving average here. Now, if we head over to the 4-hour time frame, stochastics are starting to reset, but I'm not seeing no curvature yet, pointing up. And again, this is bearish. If you're below the 200 moving average on the 4-hour time frame, we're bearish. We talked about the tweezer tops, green candle, red candle. After that, we've kind of been going sideways here. I'm not liking this wick of rejection off of the 200 moving average. So this is also looking a little bit bearish to me. Now, since we are starting to get a little bit reset on the stochastics RSI, if we could start pushing up and we could stay above this 50 on the RSI, you know what? Maybe this could end up being some type of a cup and handle play where this is the cup. And then right here, we're kind of going sideways, maybe flagging out a little bit, and maybe this could end up being the handle. Let's see what the measured move to this will give us. We could start breaking out. This could possibly bring us back up to $20. So if we could do that, that would be great. You can see this will bring us closer to the 200 moving average on the daily time frame. So let's see if that's a possibility. Let's leave that as an option. Take a look at the 1-hour time frame. Stochastics are still low. It looks like we want to maybe start rounding back up if possible. The RSI is below 50. That's not too good. And this is kind of looking to me like a head and shoulder pattern. Left shoulder, head, right shoulder. If that's the case, the measure move would take us possibly below this 200 moving average, possibly taking us to about $15, $14 around there. So right now, we need to get back above the 200 moving average on this 4-hour time frame to start building momentum and start getting bullish. If we cannot get back above this 200 moving average, I would expect more downside for SoFi. But in the long run, I still feel like we could make it to $34. Short term is still looking a little bit bearish to neutral. Now let's take a look at the Hood stock. Robinhood has been going up and down recently. Now right now, Robinhood is at $93.47. Last week we were at $110 basically. And I was calling a move down to $100 and possibly $95. And as you can see, we pretty much hit that. Now Robinhood is interesting here because we've been holding above the 21 moving average, unlike the other two stocks that we just went over. So this is still bullish. And if we could close the month of June in 4 days with this green candle, that would be bullish as well. So I'm seeing this also in some type of a falling wedge. And I could see this falling wedge taking us all the way to about $175 for Robinhood. That would be amazing. Again, monthly chart, this could take a while to play out. As long as we could stay above this 21 moving average, I feel like we're in play for that falling wedge. And we already started breaking out. Now let's take a look at the weekly time frame. Weekly time frame is starting to get a little toppy. The RSI is starting to roll over. We have to hold this 50 here. If not, it could be more downside. Now this closes tomorrow. And look, tweezer tops. Again, if we get tweezer tops, we usually start rolling over. Tweezer tops, we roll over. So this is not going to be a good indication. Last month, we were above the 50 moving average. Now it is looking like we could lose this 50 moving average if we close like this. And then again, this could bring on a bear market. Now, one thing that could save us is that this is a possible double bottom here. And we already made some of this measure move. I gave this out as a winning trade. Gave this entry at around $86 or so. And then we made it all the way up to like 112. The measure move to this takes us to about 120. We didn't make it there, but whoever took this got more than half of the measure move. So let's see if we could get the rest of it here and continue going up. Maybe this goes sideways. Maybe we get bounced off of this 50 on the RSI. We head over to the daily time frame. Stochastics are not looking good. Looks like we're rolling over. We got major rejection off of the 200 moving average. And now we're trying to hold above this 21 moving average at $92.20. Now, if we lose this 21 moving average, we could possibly fall to this 50 moving average at $85. So right now it's not looking too good for Robinhood. It does look like we could have more downside. Hopefully we hold support here at the 21 moving average. If not, we could fall further down. On the 4-hour time frame, stochastics are starting to reset, but we could drag here for a while. Again, we're losing this 21 moving average. Is not looking good. It looks like we're headed for this 50 moving average at $89.45. On the 1-hour time frame, stochastics are dragging here. So at some point, we could get some type of a little relief rally, but will it be enough to get above this 21 and 50 moving average? Right now, we're in a downtrend. This looks like it wants to head to this 200 moving average at $87.77. So right now, what I have to say is looking like we might want to break $90 and test $85 support. And then let's see what happens from there if we could move up. Overall, though, like I said on the monthly, I am still overall bullish on Robinhood as long as we could stay above this 21 moving average. It looks like we can make it up to 175 at some point later on this year. All right, guys, so let's head into some cryptos here. Let's go into Bitcoin. Bitcoin daily candle is going to close in about 10 minutes. Now, let's start off here with the monthly. This candle closes in 5 days and 1 hour. Now, this is not looking good. We lost a 50 on the RSI. We're starting to roll over. On the monthly stochastics, if we zoom in, we can see curvature rolling over as well. That is bad. Last time, it was looking like we were going to pump up, and now it's starting to roll over. We're trying to hold this 50 moving average. That's at $59,301. If we lose this, we could fall to this 80 moving average, which is at $48. It's imperative that we get back above this 21 moving average. If we cannot get back above this 21 moving average at 89,763, which I honestly don't think we're going to be doing anytime soon, this looks to me like a head and shoulder pattern. Left shoulder, head, right shoulder. This is a kind of like a slanted head and shoulder pattern that could bring us further down. Now, again, we could say that maybe this could be some type of a falling wedge that could break us up, but we have to hold this 50 moving average. If we lose this 50 moving average, it could be more downside here for Bitcoin. Let's take a look at the weekly time frame. We're starting to lose the 200 moving average here. That's very bad. The 200 moving average now is at $62,444. We see that the stochastics still haven't reset. We're falling over. Ultimately, this is a head and shoulder pattern, and this takes us down possibly to about 30K. We already made some of the measured move here of that head and shoulder pattern. I also have this on a bear flag. If we take a look at the white pattern here, we already made half of that measured move. The rest of it takes us to about 50,000. So this is not looking good. We have to get back above this 21 moving average at 70,412 to have a chance. As long as we stay below this 200 moving average, we're going to roll over. And if we lose this 200 moving average this weekend here, then the next logical move is going to this 2-week 200 moving average, which is at 43,125. Now, let's take a look at the daily chart. The daily chart for Bitcoin, I have this on another bear flag. This was the weekly one. Now, this is the daily one. And this as well has already got about half of the measured move. The measured move to this also takes us to about 50,000. So far, we've made it, I believe today we dropped down almost to 58. We're $8,000 away to getting down there. Now, something that is bearish, again, we're below the 50 on the RSI. You can see that stochastics RSI are still rolling over. And look at this, we're below the 21 moving average. We cannot get back above the 21 moving average. That's bearish. And this right here alone is looking like a head and shoulder pattern. Left shoulder, this is the head, and then this is the right shoulder, and we're already starting to break down from there. So that's another pattern that is showing that we have more downside to go. So it looks like that $50,000 target is going to come in pretty soon. Take a look at the 4-hour chart. 4-hour chart is not looking good. It looks like we're rolling over as well. See if we zoom in and we see any curvature. It just looks like we're rolling over. I mean, I wouldn't be surprised if we roll back up, but it's not looking too good. We're below the 200 moving average. That's very bearish on the 4-hour time frame. We haven't been able to get back above the 21 moving average. That's also very bearish. Let me take a look here and look how long we've been below this 200 moving average. We haven't been above this 200 moving average. What's going on here? This is going crazy. Hold on a second. Okay. Got it now. So we haven't been able to get back above this 200 moving average since we lost it back in May 15 around there. Ever since then, we've been below the 200. Been trying to grasp onto the 21, but we've lost it. We've been riding it. We're just rolling over. So it doesn't show any strength yet of us going up any higher on the 4-hour time frame. So it just looks like we're going to have further downside. 1-hour time frame, stochastics are trying to point up. But again, we keep on getting rejection off of the 200, rejection off of the 21 moving average. This looks to me like a weird, maybe double bottom. But in reality, this is actually looking to me like a bear flag here. So if we cannot get back above this 21 moving average, this looks like a bear flag that is forming, and this might be giving us the next measure move happening today or possibly into tomorrow. Let's see what the measure move here would be. Do it to here just in case it doesn't drag all the way down, because I'm starting to see we're getting some tweezer tops there as well. We cannot get back above that 21 moving average on this 1-hour time frame as the stochastics goes up. This looks like it could drop us down to about 56,000. See, if we drag out the bear flag and continue to go sideways, the measure move will change a little bit. Still 56,000, but a little bit higher, 56,875. So again, very bearish here for Bitcoin. A lot of assets have been bearish on the stock market. Crypto has been getting a beating as well. Take a look at the 15-minute time frame. Look at this. Stochastics are rolling over. We got above the 21 moving average, but kind of double topped here on the 50 moving average. We cannot get back above this 200 moving average at 61,211 with strength. Then how can we ever go up? It looks like this bear flag is going to play out. We could continue going sideways here and then eventually roll over. So I'm expecting a move to 55K, possibly 50K for Bitcoin if we cannot start reclaiming these moving averages. Guys, comment down below, go in the chat, tell me if you want me to go over any cryptos or any stocks for you. We have one more to go over, which is going to be Ethereum. We haven't gone over Ethereum in a while. Now let's start off here with the monthly chart with Ethereum. And one thing I gotta tell you guys is that if Bitcoin's going down, most of the altcoins are going to be going down. If Bitcoin's going up, that will help the altcoins go up. But Bitcoin's pretty much the master of the cryptos. You might have some one-offs, some memes, certain things that come out that get hyped, but it's not going to last long unless Bitcoin is going up. Now here on the monthly, we're below the 50 on the RSI. That's bearish. Stochastics are hovering here low. We could drag here like we did here for a while. Look at this big dip that we had. What's going to end up happening here? Unless Bitcoin goes up, I don't think this is going to go up. We saw in stochastics and Bitcoin that it was rolling over. Now, we lost the 50 moving average of 21. We lost all the basic moving averages here. So this is not looking good at all. Let's take a look at the weekly time frame. Weekly time frame is getting low, but still don't see no curvature pointing that we want to go back up. This is a bear flag here that was happening, and we already started breaking down from this bear flag. Let's see what the measure move of this is. It looks like we already made like about half of the measure move. So this looks like it wants to bring Ethereum all the way down to about $980. Let's call it $1,000 just to be even. We already made half of the measure move here. We haven't been able to get back above the 21 moving average. So unless we could do that, and especially get back above the 200 moving average at 2,472, this looks like it's in play for Ethereum, this bear flag. Let me make this nice for you guys. Let me show you the whole bear flag here. Just we could keep it here in the chart. And if this plays out, this could be a winning trade here for us. Now, let's head over to the daily chart here. In the daily chart, look at this. Stochastics are rolling over. We still have more room to continue going down. This rejection off of the 21 moving average is bearish. This is also looking like a head and shoulder pattern similarly to Bitcoin on the daily. Left shoulder, head, right shoulder. It looks like we already made some of the measured move. This is showing weakness. This is showing that we're possibly going to continue going down. This bear flag is possibly going to play out. Now, if Bitcoin's going down to 50K, then yeah, I would assume that Ethereum is going to go down at least to like $1,000, if not touch $900. We head over to the 4-hour time frame. Stochastics are rolling over. Again, we're below the 200 moving average. That's bearish. We will have to get back above 1,800. This is crazy because a week or two ago, we were at 2,400. All of a sudden now, we're at 1,565. Again, we haven't been able to get above this 21 moving average. We could see the downtrend high, low, lower high, lower low, lower high, lower low. This looks like it's going to continue going down. Take a look at the 1-hour time frame. Stochastics look like they want to go up, but if we zoom in, maybe there's going to be some curvature on the way down here. Again, same thing. This is another bear flag. This is similar to Bitcoin. This looks like it's going to roll over on the 1-hour time frame as well. Let's see what the measured move to this one would be. This looks like it'll take us, let's see, put it right here in between. This looks like it's gonna take us all the way down to about 1,450. So we might lose about $120 today on Ethereum if the Stochastics RSI rolls over and we can't get back above this 21 moving average, which is basically at 1,600. So right now, guys, for all the assets that we covered, it looks like a lot of them want to go down. I think the best one that we saw today was SoFi, that's trying to hold its level. But if the stock market, most of the stocks continue to go down, SoFi might go down with it as well. Crypto looks like it's going down as well. It's the summer months. They say sell in May and go away, and it looks like that's exactly what happened this year. Now, guys, once again, there's a link in the description if you guys want to take a look at my course, so you guys can learn how to how to read the candles and flex the moves, learn technical analysis. You could do this on your own as well. Guys, like, comment, and share. Drop down below. Let me know if you guys want me to go over any stocks or cryptos. I could make some episodes, or possibly in the next live, I could go over the asset that you want me to go over. All right, guys, so that's the breakdown, and I'm gonna catch you guys on the next chart.